Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about a poor man's cover call trade that I got involved with back on August 2nd. And I'll tell you what, I made a heck of a pitch. It was a great time to buy into Honeywell because they just had earnings and things weren't as rosy. So we got involved, and I want to do a quick update as to where that's at now. I still have that poor man's cover call trade going. I want to show you in a update video as to where we're at with this trade. I also want to show you something very important for a lot of you traders that will use the poor man's covered call. I want to show you how you can predict what the Leaps call option will be priced if the current share price is under where you got involved with the stock you're trading. So that's what we're going to talk about here. Before we get going, in the description below is an opportunity for you to gain access to the new Poor Man's Cover Call Tracker. Everything you see today with the tracker, you can have access to. And in fact, you'd have your very own copy. What I want you to do is help me support a great cause. Now, I've given away my Poor Man's Cover Call Tracker for years. Well, I have a new version that has all the calculators you'll ever need to properly manage a poor man's covered call trade. So what I want to do is this. I want to go ahead and offer it up to you, but I want you to put a little skin in the game. I want you to donate $9.95. And what I'm going to do is I'm going to take that entire $9.95 and we're going to donate that to the Pancreatic Cancer Action Network. But here's the deal. You not only get that, you get a 1 free month to my membership. Now, there's no strings attached, and you're definitely not going to be put on auto pay. You get 1 free month, and when the month's over, you're cut off. But here's the deal. Donate, and what I'm going to do is give it all to the Pancreatic Cancer Action Network. I want you to help me support a cause. Look, I've been on YouTube for 7-8 years. I want to do something positive, and this is how I'm going to do it. So, click the description below, and I'm going to match your donation. And you'll get that 1 free month. We'll love to welcome you aboard. Now let's talk about this poor man's covered call trade with Honeywell. And hey, look, if you like this video today, if anything, man, bang that like button. It lets me know you like what I'm doing. Now look, man, we're going to talk about Honeywell. But we're going to take a step back in the Wayback Machine and talk about when I got involved with Honeywell. It was back after earnings, and the stock had gotten crushed. And for me, I'm thinking, man, Honeywell, for the most part, trades in a beautiful range for months. And when this thing got absolutely wrecked during earnings and it fell past near-term support, I'm thinking this might be a great time to get involved with a poor man's covered call. Where if you don't know what a poor man's covered call, it's quite simple, and I'll be quick. We're not going to buy shares. We don't have $193 per share or $19,300 to buy 100 shares to write covered calls on this stock at the time I got involved. Wouldn't it be awesome if we can mimic share ownership? That's exactly what the poor man's covered call is all about. We buy a Leaps call option, for which is 3 to 6 months out. We buy it deep in the money, so we're simulating stock ownership. That Leaps call option we buy is generally a 95 delta or higher. The Leaps call option's delta is essentially what it will move based on a $1 move in the stock. So if you buy the 95 delta, the in-the-money Leaps that you purchase will move 95% of a $1 move in the stock. So it simulates stock ownership very closely. And that's what we want. We do not have the money to buy 100 shares at 193x, but if we buy a Leaps call option, we're not paying $193. And in fact, if you go back to my spreadsheet, what did I pay? I paid $56.95 for the right, but not the obligation, to take this person's shares at 140. So now, if my shares get called out later, I'll be able to produce shares. I'm protected, and I'll be able to cover the debit that's going to happen in my account. Now, we're not going to talk about how that all works. I've done that plenty of times. At the end of the day, the Leaps call option is all about protection It gives us that ability to buy somebody's shares, but we don't have to use so much upfront cash. And in fact, that's what we did here. When the stock was trading at 193x, I went ahead and paid $56.95 to buy the right to take this person's shares at 140. Now, I do not pull these numbers out of the air. I actually have a calculator within the Poor Man's Covered Call Tracker. And what we do is we plug in the numbers for the leap call option that I'm going to purchase, and we plug in the numbers for the near-term covered call I'm going to write. Remember, when I buy the leaps call option, I have simulated stock ownership, and I'm going to pay for that right. In this case, that's $56.59. I then dial up a covered call, as if I own the shares. I have the ability to now write covered calls against this synthetic stock ownership. So that's what I did. When the stock was trading at 193x, I dialed up the 195 strike price. It would pay $2.87 based on where the stock was trading and the move in the stock. I would collect $4.45 for 30 days. That would represent a 7.8% cash on cash gain. Now, that's if my shares were taken. We don't own shares, so there's a process to unravel a poor man's covered call trade. But for the most part, when you put the money on the table and you take the money off the table, you're left with 7.8%. Now, if the stock does not finish at 195 and it falls like Honeywell has since I'd owned this, I'm going to collect about 5% or the entire premium of $861. Now, the idea is this. Because we bought the March 2024 Leaps call option, we can do this time and time again. So now that you know the setup of this trade, and by the way, this was my very first trade, let's go ahead and revisit where we've been since August 2nd. Now again, I want to remind you, you want to gain access to the new Poor Man's Covered Call Tracker and donate to a great cause? In the description below is your link to do it. Why am I pimping this? Because what I want to do in the month of October is send them a fat donation check. And you can help me by donating. Let's go ahead and talk about where I've been since August 2nd. Very first trade, remember, my max profit was going to be close to $1,300. You can see it right here. That's if my shares were taken away. Well, that didn't happen because Honeywell starts to fall. And when it falls, what do? I look to buy it back. And in fact, it fell so quick, I actually got paid for that first covered call, some $2.87. I went ahead and bought it back, and when I did that, the money left on the table was $2.07. What did I do? I don't sit on my hands. We write another covered call. And you could see when I did this August 2nd, I then did it again on August 11th. And I went ahead when the stock was trading at 190. I sold that 195 again. I got 179. I end up buying that one back as well. You could see on the chart, man, Honeywell is just not getting off the mat since earnings. So at this point, what we're doing is trying to pick up crumbs. We write a covered call, hoping to use that 195 strike because remember, I get involved at 193. So if I have my shares taken away at 195, it's a clean trade. I collect the premiums from the covered call, and I will make money on my Leaps call option. Because remember, my Leaps call option, around 193 is when I got involved. If my shares are taken away at 195, that means the Leaps call option moves 95% of a $1 move. So that's about $2. So my Leaps call option would be profitable as well. Well, Honeywell is getting dogged here, and it keeps falling. Let's go back to my tracker and see what we did next. Of course, we bought it back. It's trading on August 24th. It falls again. So you could see it's trading at 186. We still get off that 195 strike. We get 110 for that, and I end up buying that back. We do it again on the 12th of September, and then we do it again the 9th of October. And right now, this is the current trade, and you could see I am using that 195 strike. Now, it sucks because you can see that the premiums are falling because Honeywell stock price is falling. So because Honeywell's trading over here at 183 and the strike price is 195, you're not going to get as big a premiums as you would when I place the original trade, right? The original trade is trading at 193x, and I write that 195 and I get the fat $2.87 in premium. The reason I'm revisiting this trade, I want to show you when a stock's trading lower. When a stock's trading lower and you're trying to come up with that next out of the money covered call strike, you really need to take advantage of two of the calculators in the new Poor Man's Covered Call Tracker. One, the expected stock move calculator, which it looks a little different. This is my tracker for this trade, but the one that you will get will actually look just a wee bit different. But at the end of the day, you need the expected stock move calculator. Because what you need to know based on IV right now, where might the stock trade come expiration, right? So you want to use the expected stock move calculator, which is right here. It's embedded in your tracker. And what we're going to do is we're going to figure out the expected stock move. Then what we want to do is determine, well, what will my leaps call option be? Now, for the most part, if the stock trades around 193, I can expect that my leaps call option is going to trade for about 56x. Now, it's not a perfect science here because remember, the stock has fallen and the leaps call option is not 1-for-1. So we have to make sure we understand where the leaps will be priced. So there's a process here. So let me give an example of how this will work. So say, for example, the stock is trading right now for 183.56. It's a 95 delta that's already embedded in, and I'm going to use the 195 strike. This will be an 11.44 move. Now, the leaps call option is trading for 46 right now. So the leaps call option will move from 46. It will make its move to 56.87. You see where we plug in this data to give us some expected results. What's the expected stock move during this time? We're going to use that calculator. Then we want to see where our leaps call option will be. Because, hey, if we're not going to make money, we need to understand how much money we will make or how much money we won't make. And that might be the difference between you doing the trade or not. Because sometimes, I'm going to tell you right now, I will put on so many poor man cover call trades that I could actually lose money on the leaps call option, and this sucker is making me 10, 15, 20%. So you need to know when you're profitable. And that's what these trackers and calculators do. The Poor Man's Cover Call Tracker for 2023 has all of this built in. Whether you help me donate to the Pancreatic Cancer Action Network, or you go to my website, cpt-dashboard.com, click free spreadsheets, and download the old tracker, which has the initial trade setup in it. Use it. You need to know where the numbers fall, where you are profitable. Okay? You have to use the Poor Man's Covered Call Tracker to help you with this. And as you write covered calls along the way with the old Poor Man's Covered Call Tracker, you're able to see everything just like I see it here. You have everything in front of you, and you're keeping a tally so you know when you're profitable and when you're not. The new Poor Man's Covered Call Tracker has all of those calculators to help you with the expected stock move, which, by the way, is one of the number one things I use. Also, where is my leaps call option? I use that just today for a Morgan Stanley trade. And oh, by the way, I didn't mention this, but you also have a buyback calculator and what happens if the market maker takes your shares. You might not have known, but when the market maker takes your shares and sends you cash for your covered call, well, they're going to slap you with a short sale. So you have to know how to tabulate all these numbers so you know if you're profitable or not. In the description below is the link. I want to give you 1 free month for stepping up and donating and helping me with a great cause. The Pancreatic Cancer Action Network is going to get every single dollar that you donate, and we're going to do it in the month of October. Hey, look, bang that like button if you like anything you heard today. Subscribe to the channel because we have many, many more videos coming out about covered call writing, cash secure put selling, and using the Poor Man's Covered Call. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.